All right. Welcome to the stream. We are live across our platforms. It's another DFi-nancial Friday show. My name is Alfred from Diversified Capital. Got Raymond joining us again. Raymond,
Hey everyone, how's
how
it
are you
going?
doing? What a crazy week in the market. There's
Yeah.
so much to talk about, so many fun things that I wanted to share with you guys around GameStop, AMC,
Mhm.
just a lot of cool things, right? That we should be discussing because it's taking over all news streams right now. So, of course, we're going to talk a little bit about it, right? But it is Friday.
Yeah.
I'm excited for that. It's been a stormy week, right? And I hope everyone is staying safe out there. And again, welcome to DFi-nancial Friday. Gonna talk about a couple things today. Of course, the market update, a little bit different because there's just so many things and people asking us about these meme stocks and how Reddit users are driving the market. Wanting to give you our take on it. Okay. The second part of the meeting is a little bit of early spring cleaning. Okay. What I mean by that is, how do you manage different financial accounts that you have? How many checking savings do you have? How many brokerage accounts, retirement accounts? What is the best way to be able to consolidate some of these? And coming from former operations manager over there, Raymond, it's probably the best person to be asking about how to actually be consolidating these. I don't know how many accounts that you've worked on in the past, but a lot, right? In
Enough,
terms of
enough.
cleaning accounts up.
Yeah.
Right. So we're going to get Raymond's take on what he thinks is the best way to be consolidating some of it and simplifying the way that your finances are. Right. So before we get started, remember that anything that we talk about on the show is really only for educational purposes, right? This is general financial advice and not
Mhm.
personal financial advice. And if that's what you're looking for, reach out to us directly on diversifycapital.com. Check out the different boot camps that we're hosting and find a way that maybe you would like to interact with us and grow your financial foundation. Okay. In addition, we are going to be talking about investments today, okay? Whether it be GameStop, AMC, we are not soliciting you to be buying any of it. It's really just,
Mhm.
again, learning about what's going on out there for you to be asking the right questions about some of these things and not for you to actually be buying these investment products. Finally, from a tax perspective, we're not your tax professionals. We're not really going to be talking about tax very much today, but if we do, right, you do want to be asking those specific tax questions to your tax professional. And again, everything that we will discuss here will be in a general sense. All right.
Yep.
So, markets themselves, right? Eh, we probably had one big down day, right? On Wednesday,
Mhm.
came right back up on Thursday. What are you seeing in the general markets before we get into some of the more specifics, Raymond?
Yeah. I mean, it's interesting to see on Wednesday seeing that deep of a fall within the market that we just haven't seen for quite a while, right? That might have spooked investors, which carried on the losses on the day, but it was primarily from the Fed meeting together. And the market likes to dissect the wording of the
Every
Fed.
single word, yeah.
So if the Fed says something kind of not as optimistic as the market would expect it to be,
Yeah.
you can definitely see investors get a little more concerned, and that's exactly what happened, right? So much of what we always talk about each week has been revolving around the vaccines and the recovering of the economy. And if the Fed comes out and says, "Hey, we aren't expecting the economy to recover as fast," you can definitely expect some concerns around there from the investor side, and that's exactly what we saw on Wednesday. But nice to see that we did recover slowly on Thursday as well.
Yeah, yeah. And look, you know, I think we have talked a lot about the new administration and right the COVID vaccines, and we will continually because it is driving
Mhm.
the market. But this
Exactly.
past week has not been about that. Okay,
Yeah.
this past week's headlines is so intriguing, right? In my, I mean, look, if you okay, by the way, if you haven't seen what's going on,
Mhm.
okay, open any news feed right now and just search GameStop or AMC. And what you're going to find is an idea about a Reddit channel called Wall Street Bets. Okay, it's on Reddit, and what they're doing is identifying certain stocks that big traders, big name hedge funds have completely bet against. Okay,
Mhm.
and I'll go into that in a little bit more detail, but they've bet against it, and so it was kind of in a way like a, you know, a trial, a what if we actually went against their bets, what would happen? And so you had a situation where a lot of people on these threads all of a sudden started buying up a stock like GameStop. And then the other side of this bet, right? The other side of this bet, the people who bet it for it to go down needed to cover themselves. And I'll go into how the mechanism of that in general works, but it started driving GameStop up to astronomical numbers. I don't think I've ever seen. I mean, it's happened in 2018 with some cannabis stocks before. It's not like things haven't surged like this before. But have you in your life, I mean, in your career, seen so many different stocks at once like go through the same thing, Raymond?
No, I mean, it's not just GameStop, not just AMC. That's the news of this week. But even from what we mentioned before, with just purely just Elon tweets
Yeah.
on Signal, on Zoom, but just so much like misinformation, right? That investors are just trying to figure out where to put their money in. That's a little concerning, right? And
I,
that's crazy.
I mean, maybe that goes back a little bit to what our last show was about. Like people are trying to find ways to put money into the market, right? And okay, I'm gonna say that there are people out there that are trying to make the quick dollar, right? The news headlines
Yeah.
about how one individual on Reddit was able to continually trade GameStop, not just the stock itself, but options of the stock, and pay off all his student loans in what, a week or something. I forget what it was, but
Yep.
hey, at least he's putting that to good use.
Exactly.
But right, like people are out there being, my cousin's pinging me. You're right, people that from me. Hey, how do you trade options? Like you just have people like who don't normally do this are intrigued. To me, I like that part, okay? Just because we're into the education and wanting to, provide the interest, pique people's interest in these topics. I mean, option trading and just stock trading, day trading, volume, all of that has gone up dramatically over the past year because of people being at home, right? COVID, finding different things to learn. I think that's wonderful, right? It is a little wild, right, that a Reddit thread is now, putting two hedge funds basically not quite bankruptcy, but they had to have what, $3 billion. One of them, Melvin Capital, had to have $3 billion almost in capital infusion to cover themselves for their bets. Okay, and it's just a interesting time to see that social media, as we talked about in the past, the Elon Musk tweet about Signal, and then the wrong Signal company went up a whole lot and continue to go up by that much over a couple weeks, is driving some market movements. Okay, so let's kind of parse this out a little bit. Like, what are we talking about? Like, why, for those that don't understand how this is even possible, okay, I'll just dive into just a little bit of the basics of it, right? Because to be honest, right, this is still even fairly new to us, but there's an idea out there called a short squeeze. Okay, short squeeze. So what is a short squeeze and what is shorting in general? There are people out there, hedge funds, that believe one way or another that a company is not going to do well. GameStop. Let's use GameStop as an example, right? Their business model suggests isn't working. Maybe the revenues are bad, right? Like every fundamental data point is showing towards negative projections. So guess what? These hedge funds will dump a bunch of money betting against the stock. Now, one way to bet against the stock is shorting a stock. You basically borrow it from somebody. And when I say somebody, it's part of the market. You borrow it from the market. And then you borrow the stock from the market, you sell it, right? You sell the stock at a higher price, and then as it goes down, you buy it back and return the stock. So you buy it back at a lower price and you sold it at a higher price, so you made money. But when you're borrowing that stock, the issue is what happens if the stock goes up, right? If the stock goes up, all of a sudden, you still owe the stock to somebody. But now you're worried because if the stock continues to go up, you need unlimited capital to need to buy that stock back to pay it back to who you borrowed it from. And so who determines when you have to pay it back? Well, right, these platforms track what they call your borrowing capacity, right? And so if you've borrowed a stock and it starts to go up, all of a sudden they're saying, whoa, 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 you need to now, right, spend twice the amount of money to be buying this stock back to pay back. And it reduces what capital you have on hand, right? So sometimes we call those margin calls, basically saying, right, what is in your account and what is the perceived value in your account, especially if you shorted the stock and now the stock goes the opposite way of plan, you have less value, you need to go return the stock before basically, right, you lose everything from it. Okay. So in a case like this, you have big bettors, Melvin Capital, right? Some of these other big hedge funds betting against what Reddit now has identified as, right, shorted stocks. Like this Reddit channel basically went out and said, what stocks are these hedge funds, big guys trading against? Can we bet? Can we make it go the other way to force a short squeeze? Short squeeze meaning these big hedge funds now, because the stock started to go up, need to cover themselves. So they need to buy back into GameStop heavily to pay back the stock. And so when that happens, as the stock slowly rises, they then have this short squeeze play a part because they now need to cover their position. The stock just skyrockets, right? The stock just skyrockets. And as the stock skyrockets, anybody else that shorted the stock needs to do the same thing, right? And so then you have this kind of domino effect where people just need to be buying back the stock to cover themselves. That's the general idea behind a short squeeze. And that's what you're seeing in, right, behind some of these stocks right now, is that, right, the social media, the Reddit channels are essentially playing the opposite bet and seeing who wins this bet. And as you're hearing me saying, it's a bet. Right? It's gambling, right? I mean, there's nothing fundamentally sound about what is going on, but it is very interesting. Like there's a lot of big name Wall Street people condemning this. I'm like, hey, look, at the same time, right, when the big guys do it, somehow it's the smart move. Like these short traders apparently, right, like are supposed, a lot of these hedge funds have great track records too, okay, historically. But when these guys do it, it's the smartest thing. Okay, maybe because they looked at the fundamentals and all of that, and they're actually trying to bet against it because fundamentally, right, the company isn't doing well. But in a way, they're still making a bet, right? Right? Like they're still betting against it. And so when it goes against them, they're like, wait a minute, no, right? This is not the way that it's supposed to work. It's just interesting, the rhetoric that comes right back out for it, right? And actually, right, I think it was announced Thursday that Robinhood and some of these platforms, interactive brokers, halted trading of options for GameStop and some of these things, and they got a whole lot of flack for it on social media, right? They're saying you're supposed to be the platform for the people, letting people trade, and just because it goes against it, you're now stopping us from trading. It's just an interesting dynamic going on right now. Basically, retail traders, right, and big market traders, institutional traders going against one another. And this week so far, well, okay, GameStop has come back down and AMC has come back down, but like you're seeing them battle, right, against one another. It's just a fun for us, at least, because we're not part of it, right? We can watch it, right? But it's just an interesting thing that is going on right now that we wanted to shed some light on.
Doesn't it kind of remind you of the craze around Bitcoin when it first came out around 2018? Like so much hype around it. The only difference here is that things are regulated and it's still happening in a way where
agreed.
It's interesting to see, and people are hopping on it as well, like from a legal perspective and being able to trade this way.
Yeah.
Like you said, it's kind of like a gamble. It's kind of like a bet, and people are interested in it, right? Getting it more intrigued in this type of investments. So,
and hey, for us, like I don't think I've gotten that many emails in a week about any given stock, right? And I have this week, and I think that's good. I think it generates interest, and people are learning about the markets, right? And I think the idea that you were talking about with how it relates to Bitcoin is like you had people, maybe again, retail traders, right, trying to get in for Bitcoin, and then you had all the institutions like no, right? Like Bitcoin is not real, right? Like I mean. We're not accepting it, right? And all of that. And you have this, again, battle between, right, what traditionally people think are the
Mhm.
smart guys in the industry versus not. Let me put it this way though. If you run a hedge fund, you may be the smartest person in the world, okay? Yet you make bets like this against GameStop. I mean, without diving into the details of how many shares they shorted, right? Basically, right, one of these hedge funds shorted a tremendous amount of GameStop. I'm talking like way over what I thought like someone could even short of a company. Is that the right risk management in general? Like if you're talking about someone being reckless, is that not reckless, right? Like
Yeah.
right, like I mean if the company it takes a Reddit channel to cause you to lose something like $2.7 billion.
Hmm.
That sounds like to me bad risk management. I don't care. Like it's I think someone was mentioning on CNBC like it's non-discriminatory, right? Meaning like bad risk management can happen to retail investors and can happen to big guys,
Hmm.
right? And I think it goes back to this idea. Part of like what our clients know is like we're you know like when I think about big banks and advisors and all of that, there's this kind of aura around like, hey, we know more than you. I'm like, no, that's such a poor way to like carry yourself. And a lot of, right, like, I mean, the idea that you need money, $1 million, $500,000 just to talk to somebody. That's what creates that aura. That creates this like, you need to have this status to be able to even talk to us because otherwise you're not worth it, right?
Hmm.
And I think that's the part I dislike most about our industry. And some of that is showing right now, right? It's
Okay.
showing because, right, all these big banks who made just as rash and reckless bets are getting burned right now, are trying to say, nope, we need to halt trading. We can adjust our positions. Like a retail investor, a day to day investor loses their money in option market because you made a bet the other way, doesn't get to reset things.
Hmm. There's no voice.
There's no voice. Exactly. And I just think that it just goes to show you, right, how the industry is still today. Yet right now, right, for the last week or two, retail traders are winning and everyone is up in arms, right? Like Wall Street is up in arms about how this is nuts. I'm like, hey, you know what? Like you guys made bets the other way, pushed stocks certain ways, and no one really ever said anything. So,
Yeah.
just again, just wanted to give our viewpoint about it and thought
Mhm.
that um, you know, as part of our this week's market update, we had to talk about this, right? We had to talk about
For
this,
sure.
and hope you guys enjoyed a little bit of our viewpoint. And again, hopefully you guys get to build your own viewpoint around this. If you do trade in it, just be careful. It's a game of hot
Exactly.
potato. You don't want to
Be
be the
careful.
last one holding on to it when it
Yeah.
explodes. Okay,
Exactly.
be very careful on that. All right. Let's move into account consolidation, right? A little bit of early, it's not even, I mean, it's still winter, right? But we're talking about spring
Hmm.
cleaning, building awareness. Like, why do we talk to our clients about simplifying accounts? In fact, Raymond, it's one of the first things we do with our client is look at all their accounts that they have,
Hmm.
not just the risk around each account, but just the amount of accounts somebody has and make suggestions, right?
Yeah. So for today's purpose, really just talking about how to simplify things, right? How to simplify finances for our clients. So they can look at the whole picture and not be so concerned about looking at all different places where it just scares them or confuses them, right? So we're really big in consolidation. And, we're not just talking about investment accounts, we're also talking about checking and savings accounts as well as credit cards as well. But that is the first thing, is to try to get things all in one place for clients, right? It just allows them to make it easier, even from an investment perspective, to be able to trade on just one area. Like maybe it's just one financial institution, comparing to needing to trade at maybe four different institutions where they just don't want to do it at that point. And it prevents them from rebalancing or reinvesting their accounts, which can be a concern in the long run. So,
Mm-hmm. And I think one of the things that I mean, we've talked about this in terms of like awareness. When you
mhm.
have accounts in every which way, whether it's checking accounts, investment accounts, retirement accounts, how are you aware, right, of how these accounts are doing, what money is coming in, what
Yep.
money is going out? It's just like clutter, just like anything else, like
Yep.
my closet, incredibly messy, right? I can't find anything. So,
Yep.
from a financial perspective, how are we able, right, to like find where money is going if it's not organized? It's the same idea, right? It's the same
I mean,
idea.
how many
So
times have we heard from like clients who just found a 401k lying around that's been there for
yeah,
15 years? Because it
yeah,
happens, right? People are switching jobs every couple of years, which is probably more so like our generation that we're seeing.
hmm
But how many old 401ks do they have? Whether it's $1,000, $10,000. I mean, it's great to find money within a 401k, but it would have been really bad if it was just sitting as cash for the last 15,
absolutely.
20 years, not earning us anything, right? So
So tell us a little bit about, right? Like, okay, the theme here, by the way, is having an account for a particular reason. We're not talking about like just closing accounts purely to get
mhm,
rid of all of them, but really more so, right? You know, right? The idea of why are we having a certain account. So a lot of people will open Chase accounts, Bank of America accounts because they've provided $500 as a benefit to do so. Okay, that's fine. It's nice to get those $500. But
mhm,
over time, right, if you have 10, 12, 15 different checking and savings accounts, it's just so hard to manage all of that. And
mhm,
so every once in a while, do a cleaning of it, close out accounts, bring it back down to one or two checking accounts. Have the checking account or saving accounts for a reason. That's something that we talk about.
yep,
But we're going to start with that idea of having an account for a reason with retirement accounts. Okay. So remember, you were just talking about those old 401ks, right? So,
mhm.
give us a little, maybe this little sense of like, maybe a simplified process of how someone, like, how do you even move accounts around? Can you move a 401k into an IRA? Can you move an IRA into a 401k? How does that work?
Yeah, so I like to think of it as definitely two separate types of accounts, even though they are retirement vehicles. Best way to distinguish them is that a 401k is an employer sponsored plan, whereas an IRA or a Roth IRA is a self-directed where you can place any trades that you want, right?
Yeah.
So clients do have the options to roll over, meaning they're rolling over their funds from a 401k into an IRA or a Roth IRA, depending on how their contributions were put into the 401k.
Mm-hmm.
They also have the option of rolling over a 401k, an old 401k, into their current 401k. Now, when we talk about that, we always want to confirm with your current 401k if they accept rollovers from IRAs or even from 401ks, because they should have their own instructions on how to transfer those funds into your current 401k. Now, how to kind of how to evaluate what you want to do here is how we like to look at it is just the amount, how much is within the 401k, right? Some 401ks maybe you haven't worked in the company for a long time, might be under $1,000, where they won't even allow you to roll it over. They just need you to distribute it because it's such
Mm-hmm.
low amounts. But if it's a couple of $1,000s, is it worth opening up an IRA account that you don't have yet, or maybe it's easier just to combine it into your current 401k and just have
Right.
things sitting in one place. So once again, they're really just trying to reinvest or rebalance one account instead of keeping to manage two accounts, right?
Yeah. And then, like, how do we know, right, whether it makes sense to go from, like, what are the pros and cons to keep a 401k or go into an IRA? Like, what are we evaluating? Like, are there choices in the 401k that we should be concerned about that maybe we want to keep the 401k?
Yeah, so I mean, within the 401k, generally you are going to be limited to what you can invest in. Usually, your company will select maybe 20 to 30 different types of funds that you can select from. Now, the flexibility and options there is not great, right? There's only 20,
Mm-hmm.
30 funds that you can select from. Usually, it's mutual funds. Some financial institutions allow you to break out of that 20, 30 funds. Like Fidelity, for example, has a brokerage link where you can choose anything you want. So there are different options there. But one thing that I actually bring up to our clients is just the simplicity of rebalancing within a 401k where
It
you're able
is.
to put in percentages and they do everything, do all the work for you, as compared to an IRA account where you need to calculate how many shares you need to purchase, and then it's just a little bit of more work there, but it definitely opens up your investment options.
Yeah, like you can't buy GameStop in a 401k,
Exactly.
is what you're
Yeah,
saying.
exactly.
Right? So, but also there are times, a couple times in our career where we're like, wow, this 401k has a fund that
Hmm.
you can no longer buy, right? Because it's closed. It's only accessible inside the 401k. And thus, we should keep the 401k there because we want to keep this fund. It's very rare, but it happens.
Hmm.
There's a clients that have this a certain growth fund in the account that has always done tremendously well, outperforming performing markets, yet we can't buy it right on an IRA because it's closed. So for that purpose, we want to keep it. So to your point, like evaluating what funds are in there. Again, most of the time they're just more restricted. There's nothing special about the fund, so we would want to consolidate, move it to an IRA, something along those lines, or move it into your current 401k for consolidation. I think that's really helpful because it's first remembering that once you've taken a look at the options, you can combine like-kind tax accounts. Again, I think what you were saying is, right, if you contributed pre-tax into your 401k, you can move that into a pre-tax IRA or rollover IRA.
Correct.
If you contributed post-tax, meaning it was a Roth contribution to your 401k, you could still roll it out into an IRA, but it would have to be a Roth IRA. You have to keep them in the same manner.
Exactly.
If you have both types of contributions in the account, Roth and traditional, when you roll it out, same thing. You would have a Roth IRA and a rollover IRA, one being post-tax and one is pre-tax, right? And so I think that's important to go through, simplify to say, yes, you can make these movements. You would just usually call up the providers to say, hey, like company 401k, do you accept incoming transfers for me to consolidate? And they'll tell you yes or no, right? Or in an IRA, right? I think what do you usually do? You just open the IRA, call the 401k provider.
Make sure you have an account number generated, just so that way in case they ask for it, as well as your name, just have that readily available. But usually I like to call in. It's the quicker route. It's the for sure route that you're speaking to a representative that knows the process. But generally they will cut a check out made payable to the financial institution for the benefit of your name, which is considered a direct rollover into that institution, which should be a non-taxable event in that case.
Yeah. And we already talked a little bit about checking accounts, right? Having a checking account for the right purpose. And the right purpose might be something like this, right? Hey, you know what? I want to have this main account where all our paychecks go into. Maybe one of you in the household or yourself is self-employed. And so you need to set aside tax payments. So you get paid a $5,000 monthly check from somebody as a contractor. You should set aside a percentage, 30-40% of that into a separate checking account so that you can pay your quarterly taxes, something along those lines, right? That is a reason to have a second account. Again, having those specific reasons will help you be very aware, just like when we talked about budgeting, aware of where your money is going, right? It also allows you to know if you have one account, whether you're saving or not. If your checking account keeps growing, right, where your paychecks are going into, it means that likely you're spending less than you're making and it's actually growing. You can now move that money, right, into an investment account, like a brokerage account. And again, you probably want to keep those consolidated as well, right? Having 10 different investment accounts is very hard to track what your allocation is, right? And so the ability to say, I have this one account maybe for my more diversified investments, exchange traded funds, all of that. Maybe I have a separate account in Stash or Robinhood for my fractional individual stock investing, right? And then from there, maybe you don't need any more than that. But if you do have more, ask yourself, why do I have this account? Is it because I just historically never closed this out? Because again, maybe once every year, you should go back and look at your account structure and make sure, right, it's there for a reason. Okay. Awesome. Anything else to add, Ray, on how we structure different accounts? Maybe even credit cards. Talk a little bit about consolidation of credit cards, even.
Yeah, I think that should be the last one would be for credit cards, and we've seen this pretty often too. We talked a little bit about it a couple of weeks ago, or even last week, where it impacts your credit score, right? So we just want to be careful about what we close, but just having so many credit cards does help in a way that where you have more credit balance. So you just want to make sure that if we are closing credit cards, trying to aim for the ones that have annual fees that you're just not really using, but there's no point of also paying the annual fees, which is getting more and more expensive each year.
Yeah.
So we definitely want to close those, especially as long as it doesn't have a long history or a really big balance that helps towards your credit score. But yeah, trying to limit the number of credit cards that you have, I think will go a long way in terms of being able to track, right, your credit and having a purpose around it. We know some people have it for traveling, some people have it for certain rewards, and some companies are better for certain rewards. So as long as there's a purpose behind it, we're okay with keeping it as is. But let's just not go into 5-10 different credit cards where it just gets really, really hard to manage at that point.
And if you do, and you can't close it because of the credit history and all of that, set it aside, right?
Yep.
Make sure maybe just once in a while you put a small charge on it, but don't actually be actively using it. So it's your streams of output is only coming from 1 or 2 places.
Yep.
All right. Well, that was really fun. I enjoyed that one, Raymond. Final thing here, guys. Our team worked incredibly hard at creating something that even if you're not reaching out to us directly, we did some do-it-yourself financial planning that comes with a free e-course if you buy our annual financial planner. Go check it out in the link below. And it allows you to see the store post on Amazon. We actually also just launched a quarterly version of it. So if you're not ready for doing it for the full year, we have a shorter version where you're doing it for the next quarter. Okay. It still comes with the free e-course. Go check us out. Let us know how it is. And we hope that you guys find some use to building your financial baseline. All right. Again, thank you guys for joining us. We'll be back next week again, Friday at 3 p.m. as always. And my name is Alfred from Diversify. Thank you, Raymond, for joining us.
All right. Thank you.
Have a good one.